Hi, this is Alessio. Hope you're well, and welcome to a US election special of our videos on the financial markets. In this video, I'm going to ask a very important question, which is it possible for the financial markets, for the stock markets, to predict who the winner of this year's election in November will be? And I'm going to show you, in fact, the stock market is probably the best predictor of the elections. So before we start though, I want to first of all make sure I mention three important points. The first point I want to make is that some of you watching this video are probably not going to like what I'm going to say. Some of you might think that I'm biased against one of the candidates or one of the people who's running in this election. So let me first of all begin by reassuring you I do not have any affiliations to any political party. I personally do not support any party, whether it's Republican, Democrat, left, right, or any kind of political nonsense like that. As I'm sure you know, it's really important for me to remain objective and impartial so I can give a fair analysis of the markets and also, of course, the elections this coming November. In fact, one thing I really hate more than anything is partisan hackery. Partisan hackery is when people don't actually care about evidence or facts or logic, but what they really care about is what the party says or what the leader says. As I'm sure you know, that kind of thinking is not intelligent, it's not logical. It's actually a kind of herd mentality. Anyway, let's continue. The second thing I want to mention in this video before I continue is the fact that, embarrassingly, I made a prediction in my previous video, my earlier video about the US elections, and that prediction turned out to be wrong. So let me just go through that first. In my video earlier this year, in January, I made the prediction that Bernie Sanders would be the nominee for the Democratic Party, not Joe Biden. Now, obviously, embarrassingly, I got that prediction wrong, but I want to explain to you why I got that wrong. You see, guys, as I'm sure you remember, back in the early part of this year, Bernie Sanders was winning in the primaries. I think actually he was on his way to becoming the Democratic nominee. What went wrong, and the reason I got my prediction incorrect, is that a day after I made my prediction of the US elections, two of the candidates running in the elections, that was Buttigieg and Klobuchar, they quit the race and essentially they went and endorsed Joe Biden. So as a result, their supporters went and voted for Joe Biden, and as a result, Joe Biden became the nominee for the Democratic Party. So that's the reason, essentially, why I got my prediction wrong about Bernie Sanders becoming the nominee.
Bravo!
But I think we can safely say, had that not happened back in February, then we would be looking right now at Bernie Sanders and not Joe Biden as the nominee. Okay, let's continue. And my third point I want to make is this. I am not relying on any polling. I'm not relying on any polls to make my prediction as to who could likely win this November's election. The reason is that polling or polls are actually quite unreliable predictors about who could win the elections. In fact, many of the polls back in 2016 were completely wrong. As I'm sure you remember, back in 2016, most of the polls back then were predicting that Hillary Clinton would be the winner and not Donald Trump. And of course, they were wrong. On the other hand, we got this right. Back in 2016, I predicted correctly that Donald Trump would win that year's election. Now, one of the reasons why we don't rely on polls or polling to make predictions about the elections is that they're snapshots in time. In fact, one of the best analysts of US elections, Professor Allan Lichtman, that you can see here, he said recently that he also does not rely on polls because polls are highly unreliable. Here's what he says.
The pollsters and the pundits cover elections as though they were horse races. But history tells us voters are not fooled by the tricks of the campaign. Voters vote pragmatically according to how well the party holding the White House has governed the country.
So polls are worthless?
They are snapshots in time. None of this, in the end, has any impact whatsoever on the outcome of a presidential election.
All right, guys, as you heard there, Professor Allan Lichtman, who, by the way, has got the election result correctly for 40 years, said that polling, all it does is a snapshot in time, and they're not good, reliable predictors of election results. So you're probably asking, okay, so what are good predictors of the election? What kind of things can be reliable predictors of the election? Well, in my analysis and research, it seems there are two good and reliable predictors of the US election. One is the economy, and the second is the stock market. Now, as I'm sure you know by now, the economy and the stock market are not the same thing. They're completely separate. Nonetheless, I find them to be quite useful when predicting the election result. Let's discuss the economy first before we go on to the stock market. You see, guys, in all the research and all the analysis, it seems that when the economy goes into a downturn, in other words, when there's a recession in the same year we have an election, that usually reduces the odds, reduces the probability of the incumbent president, the sitting president, to win that election. I'll give you some examples. Probably the most recent recession in our memory, apart from this one obviously, is the recession of 2008. Now you may recall in 2008 we had mass unemployment, we had several companies going out of business, and of course a significant drop in GDP. So as a result, it's not surprising that the incumbent party, the Republicans, lost that year's election. And there was a change in party. The Democrats won that year. Let's go back to the previous recession in 2000. So as I'm sure you know, in the year 2000, we had the dot-com crash, the dot-com bubble which burst, and the dot-com crash came right before a major recession. And of course, a sitting incumbent party, the Democrats, lost that election in that year. Let me give some more examples. In the early 90s, we had another recession. And as a result of that recession in the early 90s, President George H.W. Bush lost that election in 92. So as a result, President Bush became a one-term president. Let's go before that now. In the late 70s and early 80s, we had another recession. In the year 1980, we had a major recession which essentially caused President Jimmy Carter to lose that year's election in 1980, and he became a one-term president. By the way, in the mid-70s, we had another recession, which essentially brought about the loss in the election for President Ford. Let's go now to a very famous crash and, of course, an economic depression, which happened, of course, in 1929, the famous Great Depression. The Great Depression, which lasted several years, is not surprising to know that President Hoover lost the election as a result of the Great Depression. So guys, the bottom line is this. History shows that whenever there's an economic recession or economic depression, any kind of economic downturn, again, causing unemployment numbers to rise, causing GDP to fall, anything that hurts the economy also reduces the odds, reduces the probability of a sitting president or a sitting party to win the election. So that's one factor we have to consider when making our predictions for this year's election. And of course, this year we do have a recession, as I'm sure you know. Let's go now to the stock market. Can the stock market help us here? Yes, it can. You see, guys, all the research and statistical analysis seems to show that if in the months immediately before an election, for example, in the months of September and October, if in those months there is a stock market drop of 5% or more, that seems to predict with a high probability that we could see a change in the party. For example, in the previous election we had in 2016, there was a drop of 5% or more in the stock markets in that year. In fact, there was a drop of 5% or more in the S&P and the Dow. And of course, that year there was a change in the party. Hillary Clinton lost the election and President Trump won that election. Let's go back to the year 2008. In the year 2008, there was a drop of 5% or more in the 2 months before the election. And as we know, Republicans lost that election. And of course, President Obama became the next president. Let's go back to the previous one. In the year 2000, similarly, we had a drop of 5% or more in the stock market right before the elections. Again, in the months preceding the US elections. Again, all we're looking for is a drop in the stock market of 5% or more, either in September or October. And of course, we had that in the year 2000. And we know what happened next. Democrats lost the election. Republicans won the election in that year. Let's go back to the previous one. In the year 1992. Also in the year 1992, we had a drop of 5% or more in the stock markets. And we know what happened afterwards. President Bush lost the election and Bill Clinton became president. I should say there are some outliers. There are some exceptions to the rule. For example, in the year 2012, there was a drop of 5% or more in the stock market in that year in 2012. But despite that, President Obama still got re-elected. However, guys, it is interesting that in the years which do not see a drop of 5% or more in the stock market, for example, in the year 2004 and also in the year 1996, in those years, the stock market did not drop by 5% or more, and we saw what happened. The incumbent party, the incumbent president, got re-elected. Basically, guys, in a nutshell, it seems that whenever there is a drop of 5% or more in the stock markets, and more specifically the S&P, when we see a drop of 5% or more in the stock markets, in the 2 months preceding the US election, for example, the months of September and October, that reduces significantly the odds of the incumbent party or the incumbent president being re-elected. Now, one possible explanation for this, in case you're wondering why this might be the case, is that whenever investors or whenever the big money is suspecting that there may be uncertainties in the election, for example, election uncertainty, or whenever investors are fearful that a change in party may bring about uncertainty, that actually may be a plausible explanation as to why investors sell in the months before the election. They don't want to wait until the election result comes out to get out of the market. They usually sell before the election. And as a result, the profit taking brings about a drop of 5% or more in the stock markets. So guys, in a nutshell, the two things which could potentially reduce the odds of President Trump being re-elected this year is 1, the economy, and 2, the stock market. So you're probably wondering now, okay, now we've done this analysis, what does the economy and the recession say about President Trump's chances of being re-elected this year in the year 2020? Well, guys, before I continue, let me just say once again that some of you watching this video may not like what I'm going to say. Some of you might reject my conclusions based on the facts. And that's okay, we can disagree. And guys, remember, all I'm saying at the moment is that the stock market and the economy can give us probabilities as to whether the president may win or lose. It's only probabilities. I'm not saying these are certainties. There are no certainties in the markets, and there are no certainties in being able to predict the future. Okay? There are only probabilities. All I'm saying is that based on the facts we have at the moment, which is the economy and the stock market, they do not seem to support our friend, the president, being re-elected. For one thing, as I'm sure you're aware, we still have a terrible recession. We still have mass unemployment, and also we have about 30% of people in America facing evictions. So from an economic perspective, we've seen before how whenever there's a recession or an economic downturn, it does not favor the sitting president, the incumbent president, or the incumbent party being re-elected. As you've seen before with President Clinton, with President Bush, with President H.W. Bush, with President Carter, and so on and so on. So a recession during an election year, unfortunately, harms the chances of the president, in this case President Trump, being re-elected. Now what about the stock market? Well guys, as you've seen for yourself, the stock market has already dropped by 5% or more since the highs we made in September. As I'm making this video right now, we've seen already a market drop, a drop of 5% or more in the S&P and the Dow, which by the way has happened in the 2 months preceding the US election. It happened in the month of September, and that is a bad sign. So that already is giving us a big warning that the sitting party, the incumbent president, in this case President Trump, has a lower probability of winning the election. It does not mean President Trump will definitely lose the election. No, it doesn't mean that, but it does significantly reduce his odds, his probability of being reelected.
I don't believe that for a second.
Now you might be thinking at this point, well hang on, what if the stock market recovers and makes new highs? Surely that will change the odds. I personally don't think so, and here's why. Economists were predicting some months ago that we're going into a V-shaped economic recovery. In other words, a quick recession and off we go back into an economic recovery. It turns out that's not the case. As I explained to you in my previous video, we're now in a K-shaped economic recovery. So what's a K-shaped economic recovery? Well, it simply means that people who have investments, people who have stocks, for example, well, they're going to do very well. They're probably not suffering as much right now. But people who don't have investments and people who don't have stocks, which actually is a significant portion of the population in America, over half the population in America don't have significant investments in stocks. So when it comes to the elections, most people vote with their pockets. They don't vote just because the stock market is going up. They vote with how they feel about the economy. So even if the market makes new highs in the next few weeks before the election, nevertheless, the facts show that whenever you see a drop of 5% or more in the months before the elections in September and October, that already is giving us a big warning that there's going to be a change in party, that the incumbent president, the sitting president, may very well lose the presidency. Now again guys, this is only based on probabilities. It's not based on certainties, okay? So even if you don't agree with me, that's okay, because remember, this is just based on probabilities. At the moment, the stock market and the economy is giving us about a 70% probability that there's going to be a change in party, that the sitting president, that the sitting party is very likely to lose the election. So that means, unfortunately, it's not looking very good right now for President Trump. So that means, guys, what President Trump is going to need to win the election this year is pretty much a miracle. It could still happen, but I think the odds are actually quite low. Guys, let me know what you think. Let me have your comments in the section below, and look forward to seeing you guys in the next video. Thanks very much indeed. Bye for now.